Okay, let's settle down because this is going to be a very strange video. Dear Turkey watchers, welcome to Alice's Wonderland. This is the country where reality is flexible. It could go one way or the other way. A few days ago, I broadcast a video covering my 2022 predictions for Turkish politics. This is a follow up. Now I'm going to give you my predictions for Turkish economy in 2022. First of all, I'm going to recap the negatives and positives of 2021. Then I'm going to talk a little bit about Erdogan's Alice in the Wonderland economic model. It's certainly pushing Turkey into the abyss. I don't think it's going to last long. And my predictions are based on the assumption that we ditch yet another new economic model by end of March. I'm sorry, by March, and transition to something that makes more sense. Actually, everything makes more sense than what Erdogan is doing right now. But we'll skip over snarky remarks. Secondly, in my politics video, I forecast early elections, and I stick to that forecast. But for the sake of economic predictions, obviously, I'm assuming that the current government will stay in the administration through 2022. If, as I predicted, there are early elections, then of course the outcomes will change. They will probably not get worse because, believe me, it's very difficult to do worse. Mr. Erdogan is doing a stellar job. Anyhow, let's move to 2021 recap. Positives, double-digit GDP growth. Turkstat statistics are kinda iffy. There's a certain amount of cynicism or sarcasm about their truthfulness, but from a variety of indicators, I can tell you GDP growth was very strong this year. Probably at the end of the year, Turkish real GDP would have grown by 10%, which is, I think, one of the best along with China and India. Um, no current account deficits or very modest current account deficits, roughly 1.5% at the end of the year. This is important for those of you who have recently started following Turkey because usually Turkey is a chronic current account deficit country. In other words, its exports and goods and services are always much lower than its imports. Therefore, it continuously leaks foreign currency to the global markets. This year, we seem to have brought this situation under control. And of course, let me show you the budget here. Just a second. Uh, bu- 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 bu. I'm sorry, these are in Turkish. Believe me, I usually try to prepare as well as I can by providing a lot of visual material for these videos, but this time I lack the energy because nothing makes sense. This is November budget balance. As you see, the budget deficits have shrunk significantly. We will probably end the year with a budget deficit to GDP ratio of 2% or slightly less. On the other hand, of course, monetary policy is a mess. The current official rate of inflation is 21%. The central bank's policy rate, the fundamental interest rate in the economy is 15%. And as you watch this video, central bank would have probably cut rates further. God knows how much. Because central bank is not doing it. It's Mr. Erdogan doing it. As a result of that, as IMF shows on this graph, Turkey has one of the highest inflation rates among emerging markets, and I can tell you from now, by now, that it's going to get worse next year. And finally, as it comes to negatives, look at this chart. That chart from Reuters. This is kind of old, about 2 weeks ago, but I didn't want to put new ones because the exchange rate can fluctuate up to 7% per business day. So by the time I put up a new chart, it will probably be outdated. So I stuck to this old one, which shows Turkish lira massively, massively underperforming any other foreign currency. I don't think Afghanistan is there. We have probably done better than Afghanistan, but even that's not certain, to be perfectly honest with you. In addition to soaring inflation, which, by the way, according to a Metropole survey, people on the street think is not 20%, but somewhere between 50 and 100%. That's food inflation. I'm sorry. Not headline inflation, food inflation, 50 to 100%. So, what's the truth? I don't know. Ask Alice. Ask the Berkshire cat. Uh, I just do with official numbers simply because I can't make them up as I go along. I need sort of a benchmark or a roadmap to make predictions, and official figures are the best. But even according to official figures, Turkey has one of the worst inflation performances well, in the entire planet, and I suppose in the Milky Way, though I can't provide definitive proof for that. Stubborn unemployment. The latest data we have is end of October, and the broad-based unemployment, that's the figure covering those who are working part-time or who would prefer to work more hours, is 22%. And of course, unprecedented poverty. I shot a video below, we can find it, and I called the conundrum: how can such rapid GDP growth go hand in hand with rapid, drastic, and very visible deterioration in the income distribution, or distributional justice? I honestly don't know, and I haven't found an economist who can explain to me how, if the GDP growth figure is correct, it's not trickling down. Anyhow, currently, Mr. Erdogan is probably aware that the negatives overwhelm the positives, so he's experimenting with a new economic model, which essentially amounts to turning Turkey into an export powerhouse like China by letting the currency go as weak as it can. Turkish lira depreciated something like 80-90% against the dollar this year. Lowering interest rates below the rate of inflation to presumably stimulate consumption of houses, consumer durables, and private sector fixed investment. There is really not a single real economist in Turkey or in the world who believes this experiment is going to work. And Mr. Erdogan is known for experimenting with economic models. During Berat Albayrak, the notorious economy czar, also his son-in-law, the economic model is supposed to be high technology society. We're only going to do high value added goods and services and get out of labor intensive industries. That changed. The prime minister, a few years ago, Professor Davutoglu, promised 1,001 structural reforms to improve the performance of the Turkish economy. Now we're experimenting with the China model. God help us all, is all I can say. But all I can say is, look, I mean, I did another video below. Turkish economy, when I shot the video, was inching towards a complete standstill. And now we have more evidence that this is actually happening, that people are not importing raw materials. People are very reluctant to sell the semi finished goods or raw materials in their inventories because they don't know at what price they can replenish those inventories. A lot of final goods producers have stopped production simply because if they were to reflect cost increases to their final prices, there would be no buyers. Basic, law of economics, supply and demand. If the supply is too costly, there is no demand. Somehow, Mr. Erdogan, who claims to be an expert economist, missed that class in college, I believe. Anyhow, since if this model remains in practice, throughout 2022, Turkey would become a train wreck. I assume in a few months it will be ditched for something that will be more sensible. Either Mr. Erdogan will allow interest rates to be hiked to stabilize the currency, or he will declare some kind of currency controls. God knows what he's going to do. But assuming a more reasonable economic policy setting is established, I make these predictions. And they are really not very bright. Even if Turkey imposes exchange rate controls, that is, freezes the exchange rate at the current level for the next year by telling people, no, you can't withdraw your FX deposits from the banks. The accumulated PPI inflation would, of course, pass through to the final price inflation. And I predict that even under best circumstances, and assuming Erdogan stays in power, through 2022, CPI inflation will rage at a rate of 30% per annum or even more. Hey, I'm really not exaggerating this. A former central bank governor who was dismissed politely claimed that at the beginning of the year, when the minimum wage will probably be raised by 40%. No, no, no. This is not a pronunciation error. It's not 4%. It's truly 40%. And believe me, that's not sufficient to restore the purchasing power of the minimum wage at the beginning of 2021. Anyhow, the governor says, well, if they do that, then Turkey is heading towards hyperinflation, which is probably three-digit inflation or uncontrollable inflation. I'm actually at the optimistic range of inflation forecasters by saying 30%. Good news, there will be no current account deficit. Bad news, this is not because Turkish exports will explode through the roof, but nobody will have money to import anything. I mean, you know, just a second hand, very basic sports utility vehicle sells for $80,000. That's a second hand model. Okay? So, who is going to import the new models? The same is true for all consumer goods and investment goods. Turkey will restrict imports to basic necessities like medicine, energy, um, certain food staples which are in short supply, etc., etc. But the rest of what we call, you know, um, discretionary import demand would completely die off. Unemployment obviously is not going to get better under these circumstances. Just a technical note so that the economists among you don't criticize me too harshly in the comments section. Unemployment rate is kind of difficult to estimate in Turkey because labor participation rate is all over the chart. I mean, it goes from 45 to 52. But anyhow, assuming labor participation desire doesn't change, unemployment is once again reach pandemic heights, which is something like 28%. Once again, remember, I'm talking about not the headline unemployment rate. I'm talking about broad unemployment rate, which really is the better measure if you ask any economist or Fed Chairman Mr. Powell. So, you know, we're talking about one fourth or one third of those able and willing to for work not finding any jobs. You know what? These people are not drawing any welfare or social security income either. So essentially, they are doomed to poverty. So I expect the poverty to get worse. And in fact, this is politics, and I said it before, but unless Erdogan changes tack very quickly and transitions to something more um, uh, akin to orthodox economics, I expect massive street protests in the winter because, again, other polls show me that up to 50% of the population may have only sufficient income to pay basic bills and no money left to spare. Officially, The poverty rate in Turkey is over 22%, and it will probably rise further, and income distribution gap is going to widen, which is always a cause for social unrest. The black swans or tail end risks are, of course, at some point, if the currency depreciation continues, the world will restrict credit to Turkey. Turkey is a very credit dependent country. We need to roll over at least 100 billion, $180 billion of maturing debt per year and pay $6-7 billion of interest on the existing debt. So if I'm not saying the you know foreign banks and investment houses will cut off credit to Turkey or will not purchase any of our euro bonds, but limits will be reduced so that maybe Turkey can roll over 75% of its debt and the rest will have to be paid off. And that's not a current account deficit, but it is a balance of payments deficit, which will come from central banks' already meager resources. At the end, though, I mean, if this crazy policy experiment continues, budget revenues will collapse and Turkey will not be able to borrow at all. Even under current conditions, I expect bad loans to become a serious problem in the second half of the next year, simply because, as I've said, the basic business person doesn't know what the exchange rate is going to be tomorrow, doesn't know what its input costs will be, and doesn't know or can't reasonably predict the profit maximizing final price she should charge. A lot of companies would borrow too much. Thousands of smaller ones will not be able to pay off or roll over their maturing loans. Others will make operational mistakes such as buying too much inventory or selling too low. There would be collection problems. Remember, the business tradition is, uh, the final buyer makes an order, you deliver the order, and you essentially open a 30 or 60-day trade credit to your buyer. And if the buyer goes bankrupt in the meantime or has cash flow difficulties, well, then there is a chain link event of bankruptcies, and all of which will end up in bank balance sheets. Honestly, it's my sincere desire to be able to broadcast an optimistic video about Turkey before I meet my maker. And I hope that's going to happen in 2023 if we survive 2022. Well, just in case I die or won't be able to broadcast another video, Merry Christmas, season's greetings, and Happy New Year to all of our watchers. By the way, I met two of them virtually, one from UK, one from United States, and it really made me very glad to see faces attached to comments and to traffic figures. If you like this, please share it with others. Otherwise, stay safe. Omicron is nothing to be underestimated. This is Atilla Eşilara saying goodbye from Istanbul on behalf of Real Turkey Channel.